In the world of waste management, one company stands out: Waste Management. This industry giant boasts a strong financial performance, but might be overvalued. Now, let's delve a little deeper into this. Waste Management, a company that has received accolades in the waste management industry, has an impressive financial performance to its name. It's sitting on a net debt of just under $15 billion and has recently reported revenue earnings of $5.2 billion in the most recent quarter. The company's financial health is further evidenced by its net income, which increased by almost 4%. Additionally, its earnings per share, or EPS, a key indicator of profitability, also increased by 5%. With a price-to-earnings ratio of just under 30 and a modest dividend of 1.7%, the company appears to be in a strong financial position. But it's not all rosy. The company's free cash flow, not counting growth, is just under $800 million. It has spent over $600 million on shareholder returns, a significant amount by any measure. And then there's the elephant in the room: the company's debt. Rising interest rates could potentially inflate the cost of this debt by an additional $500 million. This is a concern that cannot be overlooked. Despite its strong performance, Waste Management's minimal growth and high valuation might make it overvalued in a high-yield environment. The question we're left with is whether the company's financial performance can justify its current valuation. Stay tuned as we explore this in the next scene. Next, every investment carries risks and potential returns. Let's delve deeper into those concerning waste management. Consider this: waste management is notably overvalued when compared to US Treasuries. This might seem like a complex comparison, but it's rather straightforward. It all comes down to the concept of free cash flow, or FCF yield. In simple terms, the FCF yield is a way to determine the return an investor would receive from a company's free cash flow. Now, for waste management, the FCF yield sits at around 3%. In contrast, current 30-year bonds offer almost 5% yield. This means it would take a staggering 13 years for Waste Management's FCF yield to match those 30-year bonds. Now, let's shift our focus to the risks. The most significant threat to Waste Management's growth is a dramatic acceleration in the growth rate. It's a paradox, isn't it? But think about it: if the growth rate spikes too quickly, it could lead to resource strain, operational inefficiencies, and potentially a decline in the quality of services. This could, in turn, tarnish the company's reputation and impact its bottom line. Furthermore, regulatory changes could pose another risk. Increased regulations could potentially decrease competition, which sounds like a good thing, right? But this could lead to complacency and a lack of innovation, which can hinder long-term growth. On the flip side, these very regulations could also increase earnings by creating barriers to entry, making it harder for new players to enter the market. As investors, it is crucial to weigh these risks against the potential returns. In the case of waste management, the risks might outweigh the returns. Investing is not just about the numbers, it's about understanding the market, the industry, and the specific companies within it. And that's a wrap on our discussion on Waste Management's potential overvaluation. We've delved into the company's financials, we've explored the risks and returns, and we've painted a picture of a company that, while strong in its performance, may be overvalued in today's high-yield environment. Remember, knowledge is power. As an investor, it's crucial to keep learning, to stay informed about your investments, and to constantly reassess the landscape. Be it the waste management industry or any other sector, understanding the intricacies and the dynamics at play can make all the difference in your investment journey. So, let's continue this journey together. Stay ahead of the curve by subscribing to our channel. We provide the latest news and insights into the world of finance, helping you make informed investment decisions. Don't miss out. Subscribe now.